Good evening, ladies and gentlemen. Welcome to our investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to bring you yet another installment of our weekly upload. Joining me today is Justin Scott, investment banker and analyst, a familiar face and voice on the panel. Welcome, Justin.
Pleasure as always, Dan.
Great to have you here. Today, he'll be covering Knutsford Express Limited, and I'll be covering One-on-One Educational Services Limited. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this just about every week. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry Investments Limited. Follow us on social media to learn more about how you can get started today. Okay, up first, we'll have Justin covering Knutsford Express Limited.
All right, thanks, Dan. And we're back right here. So, Knutsford Express has done tremendously at the end of their 9-month period closing February 2023. They've done really well considering the tourism numbers have really been boosting their top line, moving their revenue 65% from $774 million to $1.28 billion, and their net profit has increased 366% from $45 million to $211 million. This is tremendous because the same period last year was also a triple-digit percentage increase. So Knutsford is absolutely back. They're been boosting from the tourism numbers, as I said earlier. More people are traversing from Kingston through all the other locations that they have. People who are flying in from the Montego Bay Airport, which is the most popular airport in Jamaica. The people have just been coming and going, as you'd have been seeing earlier. When we spoke on ESL, we told you about over 3 million people doing stopovers in Jamaica over the course of 2022, and it shows that the numbers are here to prove it. In addition to that, the Drax Hall location is operational now. It's been, added to their revenues through rental income. And further from there, they do have plans to further optimize their business and expand even further. Total assets increased 24% from 1.3 billion to 1.6 billion. Liabilities are up as well. They recently did some refinancing where they closed out their bond for a tune of about $300 million. And with a note, we're going to be hearing more about that when the audit comes and see just what exactly the arrangements or the terms of that note is, right? Further from there, they've even reclassified some of their property, plant, and equipment through to the investment property. They spent about $25 million over the course of the 9 months investing into that. Reclassified it. I believe it should be the Draxall location, but once again, once the audit comes out, we'll hear more about it further. The PE ratio is currently about 21 times, which is a drastic reduction from the over 300 times the same period last year. Current price $11, and the trailing EPS of 55 cents. So yeah, Knutsford has just been doing really well, and I expect them to continue doing even better as the years go by, because they're going to be they're definitely going to be expanding further. They're going to be leaning into that. They're going to be leaning into the parcel delivery services and such things. So we can expect a lot more of that, especially when tourism numbers continue to rise going forward. So moving on, we'll see a little bit more how the quarterly profits have moved. So it's only been getting better since 2021. As you can see, it's rising further. We can expect them to be doing roughly around $50-60 million in net profit per quarter. I expect that to increase to about $60-70 million going forward to be the new baseline as they step that up. And then if you move on to the third slide now, you can see how the share price has been moving. Once people started to realize that, Knutsford is indeed one of the periphery tourism stocks out there, it started to boost interest as the profits had moved, and people started to look into, okay, well, how can I benefit from all the changes that have been going out in Jamaica's economic space right now? Appreciating about 40-50% from this time last year. So it's been great for them. Knutsford shareholders are definitely looking better. So I expect them to be doing maybe a bit more in terms of expansion towards their delivery services, and maybe a bit more into the real fixed assets and property side as they go forward from here. Dan, any thoughts on Knutsford?
Yep, it's great to see the comeback. Really great to see the performance in the last 9 months, and When you look at the graph, you can see, as you said, Justin, that they're definitely moving to a new baseline level of quarterly profits, perhaps in the $60 million per quarter region. It's trading a little bit rich at 22 times, but again, I think as the interest rates trend back down, and that is definitely coming, folks. We saw where year-to-date inflation, Justin, is 6.2%, so it's coming right back into the BOJ band. So I think we're going to see interest rates in Jamaica coming down sooner rather than later. I definitely think by September they'll be trending down. We'll perhaps see the junior market PEs back up to 18 times, maybe 20 times by end of the year. We could see earnings growing a little bit more strongly from Knutsford. It's good to see the growth in the asset base. If, like me, you bought some of this stock last year when you saw it down at $6, you would now be up 70%. And I think it's still a good hold. There's good potential for growth. Ignore the fact that I'm selling because I'm just realizing 70% gains from my investment last year. But I really looked at it, all of the tourism-related stocks that were strong and solid. I took good positions in Knutsford Express and CPJ, just to name two, and they've done tremendously well in the last year. So great performance. Good to see the asset base growing to $1.6 billion. Robust levels of shareholders' equity.
Right.
So I think in the future we could see good dividends from this stock as well too. So I think it's a good one to hold in your portfolio if you have it already. And I'm expecting bigger and better things for them as the year progresses. Okay, thanks for that. Okay, up next, we take a look at One-on-One Educational Services. So this is a company that IPO'd last year, August, if my memory serves me well, Justin, at $1. They issued 380 million shares, raised about $358 million. They put out a forecast which said they would make $140 million in the 2023 year. In fact, that forecast came out in their fourth quarter before it was finished, and they had projected to make $55 million for that quarter. Instead, they lost about $2 million. And so I'm a little disappointed that they're not hitting the numbers that they put out in their own prospectus. Again, projecting to get to $140 million by 2023, $160 million by 24, and $180 million by 2025. Instead, let's look at what we're seeing for their first 6 months, sort of post-IPO. We're seeing revenues of $153 million, gross profit of $127 million, and a profit after tax of only $17 million. So again, in the forecast, they said they would do $140 million for this year, and we're doing $17 million, so a fraction of what was promised. So at the $140 million that they had forecast when the stock came out at $1, that was at 12 times PE, and folks would have said, okay, this looks like a good buy because you're going to make $140 million, and I'm going to buy at $1, and that's at 12 times PE. We see the stock trading at $1.15, and the result of the poor performance is that the PE is 105 times. So this is a problem. It's definitely a problem, and they need to earn their way back into reducing that PE, which means getting to $140 million profitability. Quite frankly, I don't know how they're going to do it. Let me complete my analysis. So shareholders' equity is up to $459 million. Total assets up by 92% to $634 million. They have about $120 million of net cash. They do have some debt. Got $144 million of receivables, which is a little bit of a concern. That's quite a bit of a drag on cash flow. That's 165 days of receivable days, to put that into perspective, and $228 million in intangible assets. So it is relatively asset light, to be frank, when you discount those things, but still generating some cash over the last year period. In the last quarter, unfortunately, not generating cash mainly because of the drag on receivables. And I suspect that's receivables primarily from GOJ, because I don't think you generally extend 165 days receivables to a normal trade customer. So got to watch them there. But I do wish Ricardo Allen and the team all the best. I really do hope that they have a plan to get to $140 million earnings, because that's what's required to justify the stock price. And perhaps we'll try to get him on the program later this year. We know Ricardo fairly well. He has very strong backing, great board, great backing from the likes of Danny Williams, Michael Bernard, and a host of ex Jamaica College folks. So Ricardo, do us well, get those results up. Next slide shows quarterly performance. Again, Q1 2021, a $2 million loss when he, in his own prospectus, projected a $55 million profit, as I said before, and then the profit just hasn't been able to jumpstart. I mean, to get to $140 million a year, you need to be doing $35 million a quarter, nowhere near there so far. So again, still looking for it and holding the faith. You see them get there. Let's see how the stock price has traded. So they raised about $358 million from the IPO, and stock price traded up initially as high as $2.35 and then sort of flattened out as soon as the audited financial statements came out, and it was sort of obvious that they weren't going to be making the numbers that they promised. So it's traded pretty flat at $1.10, $1.15. As earnings have not delivered, the PE is now ridiculously high at 100 times. And so this stock price is definitely overvalued at this point in time. And what we need to see is the earnings turning around to justify even this stock price. So this is definitely one I personally would stay away from at this time, but we will watch the results to see if the profitability does come back. And as I said, folks, will try to get him on the program later this year to talk about all the great initiatives that they must have had in the pipeline to put out that type of forecast relative to the actual results, which have 12-month trailing earnings of only $20 million. Justin, your thoughts?
Thanks, Ann. So, One-on-One, it's one of the educational technology companies that we have listed on exchange, right? So, where they are right now, they're definitely going to need to be doing a lot more, as I said, to justify the price to earnings. They have gone out to say that, in Q3 we can expect some advancements and notices relating to the advanced intelligence bot, UNA, I believe it's called. So by Q3 they're supposed to make an announcement there. I don't know if based on their current capitalization or cash that is going to be released at that point, but they're probably announcing it in that quarter to then further develop and release it in the following financial year. They branched out into other Caribbean territories as well as Singapore, but I don't know just how much that's going to be bringing to them within the next 12 to 18 months just as yet. But I would like to see more along the lines. I'd like to see them getting more deals and further outreach within the Caribbean territory. So branching out into AI is good. It's what's on everybody's mind right now, and I'm sure when they release it, it's going to be a lot of the talk on the town. But in terms of the actual offerings and how it's going to translate into value for their users, and then further into value for the company, and then even further into value for the stock price, that remains to be seen at this point. I'd love to see more about the actual ongoings of it, to see just how in-depth it is, to see how it compares to some of the other ones like Google's Bard, ChatGPT that we have out right now, and just how advanced it is and how beneficial it may be. I'm very curious to see how that works out. But as it is right now, One-on-One isn't on my personal radar. I would like to see them advance further. I'd love to see the developments of education as it is. But as the business side of things go, we'd like to see how it goes further from here.
Great. Well, thanks for that. Those are our honest views today on One-on-One Educational Services Limited and Knutsford Express Services Limited. So that's it for today's discussions, folks. I'd like to thank our viewers for tuning in today as usual. Your support is always appreciated. I'd also like to thank my co-host, Justin, for his valuable contributions. Thanks, Justin. If you're curious about our updates on our virtual investor forum, then find us on social media. We share live stream dates and upcoming guests on our official social media pages. Give us a follow-up and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all our notifications. Remember, folks, keep safe, and remember, wise investors, slow and steady wins the race. Goodbye.